You restore the CO2. Can you hear me? Good morning, Jacob.
Yeah, good morning.
Okay, so we'll just wait a bit for other people to join us, then we'll start. And we're like 5 in class to start.
All right. You didn't share the material for today's class also.
I'll share it now.
All right, thanks.
Okay, good morning, everyone. I've shared the material for the class to your group. Can we confirm that we have gotten it? Have we gotten it? It's on the group.
Yes.
Okay. So I said that when we are 5, that we'll just we're 5. When we have 5 people on the call, that will start. So just give them, because I know that we had about 9 last class. So one more person now will start. Okay, so I don't it's taking too much time, so I guess we'll just start so that I don't take your time, okay? So good morning, class. How are we? How are we doing? It's a good, although this class is recorded, but it's a good time to basically ask like how you are doing. How has if you are doing more than one online course, how has that been? How has that been? Somebody on the call can
Time.
just, how has it been so far? Or you're just
Time.
consuming knowledge. Who has started to read here? Who has started to read here?
So you
Oh, yeah,
asked how has it been? I said time
okay, I
because
said how has it
because
been? Okay, I heard fine.
I
I
said
heard fine.
time. What I meant by that is, I think for everybody that is in this class, I think
Yeah.
we opted for online because we are engaged during the day. Okay, I am engaged during the day, so you finish your function by say 7 p.m. You enter class by 8:30. You are done by 11. So Monday to Friday is extremely difficult to put in work. Extremely, but it's okay. Find a way to go.
Balance it out. Wow, that
It's
seems like
extremely difficult Monday to Friday.
hmm, hmm. That seems like a lot, honestly. And uh I even I'm of the school of thought that online classes for ICANN is harder. Not like it's harder, but it requires more intentionality, right? And a lot of people don't realize, they're like, oh, can I have an online class? It's flexible, all of that. But there's a lot of responsibility that is being pushed to you when you opt for an online class. And for people that have 9 to 5, that can be a whole entire new conversation. So
Nine to
I don't know
seven.
how. Eh?
You said
Okay.
9 to 5. I said 8 to 7.
Okay. In the city we live in. But yeah, just say that I'm rooting for you. That's the best that I can honestly do. Okay. And I think another thing would be that you need to just I would say make it count. You're already here regardless. You're already paying for this class. And the least you can do is just to make it count in the grand scheme of things. Okay. So we're going to be here rooting for you and clapping for you all the way. Because that's the best that we can do. Okay. So with that being said, I think this is enough. I just wanted to know the temperature of the room before I start teaching. So I'm not just teaching over your head. You can see my screen, right? Can everybody see my screen? Okay. So this morning, what we'll be doing is assurance services. We know that audit is an assurance service, but it doesn't mean that audit in itself is totality of the assurance service that people can carry out for firms, right? Not people, that firms carry out for organizations. I think some of us here are practicing, so you know that yes, audit is one of the assurance services that give the highest form of assurance, but it doesn't mean that that is the totality of the assurance services that we as professionals carry out. Okay, so in this class, we're talking really about other kind of assurance services that we have, and we'll be looking at, that's it. Basically, we're talking about other type of assurance services that we have. And another part of this chapter is forensic accounting, forensic auditing. So it's not so elaborate. It comes out a lot. But it's nothing far-fetched that you won't have heard in this class. So you know how we do it now. Somebody will mute and read for us. So somebody can mute, you just read your value for money, and then I explain. Okay, so who is starting with us this morning? Hello. You guys want me to start calling name? It's a bright and shiny morning now, eh? Zainab, okay, I can see that I have a fellow woman in this class, and I suppose to mean right and wrong. So Zainab, can you read for us? Yes, let's start the way. Zainab has connected.
Okay.
Okay.
Sorry, good morning.
Good morning.
So traditionally, the assurance role of the professional accountant has mainly been concerned with provision of audit services within a statutory framework, the audit of published annual financial statements. However, the management of companies and other organizations are required or expected to report to stakeholders on a wide range of information, both financial and non-financial, that is not subject to statutory audit. This might include such matters as corporate governance issues, including risk assessment and internal control systems, e-commerce and the operation of e-commerce activities, systems reliability, performance measurement, both financial and non-financial. Then lastly, value for money, VFM.
Thank you very much, Zainab. So just like Zainab has read, like that's what I was trying to explain before now, that when we talk about professional firms, one thing about providing professional service, one of the things that our mind just comes to is audits, right? However, there are other range of activities that are assurance services that are not necessarily the statutory audits that we know. And that's what we'll be looking at today. Corporate governance issues such as risk assessment, internal control, they are also assurance, but we've done internal audit and outsourcing in this class. And you know that from that topic, right, you know that yes, internal control is like a means of assurance, but because they are dependent on the firm, there's a limitation on the kind of assurance that they can provide. We'll be looking elaborately at e-commerce and the operation of e-commerce activity. A lot of firms now, they don't even have like physical appearances. So if we're auditing, just basically looking at that, if we have to audit businesses that are very strong in the e-commerce space, what are the things that we have to look out for? System reliability in terms of internal control, and also performance measurements. That's like audit of like management accounts, things that don't go out, right? But they don't go out of the organization. But yes, there's some things that management can reach out to you to carry out assurance services for them for. And we have value for money audit, which are the 3 E's. You must have heard that from your PSAF. You'd have also heard that in, I think, internal audit as well. We'll talk about efficiency, effectiveness, and economy, effectiveness, and efficiency. Okay. So yes, let us start right into it. So that person can read for us. Yes, you can read for us. Available guidance on assurance engagement. This is the best way to engage you and make sure that you are not just listening to one voice, but you are also in class. That's why I really encourage students reading as well, especially if we have a material like this. Somebody should read for us. Hello. What's going on? When I say somebody, I mean anybody. Okay. I think Jacob joined this class first this morning. So Jacob, can you read for us, Mr. Jacob? Can you guys hear me?
All right.
Yes.
So
Okay.
available guidance on assurance engagement. So guidance on the conduct of assurance engagement is provided by 1, the International Framework for Assurance Engagements and the International Standard on Assurance Engagements. That's ISA 3000. So the first one, the International Framework for Assurance Engagements. The framework makes a distinction between audits and reviews of historical financial information that's regulated by the ISAs and the ISREs. Then assurance assignments that give a reasonable level of assurance, and assurance assignments that give a limited level of assurance, right? So in assurance engagements, it is not possible to give an absolute level of assurance as a result of 1, lack of precision often associated with the subject matter, the nature of the evidence available, and the time scale involved. 2, International Standard on Assurance Engagement, ISA 3000, sets out basic principles, key procedures, and guidance for professional accountants referred to as practitioners when carrying out relevant assurance engagements. So the key general points from ISA 3000 are set out below. The first one, ethical requirements. The IFEC ethical code should be followed. Then we have quality control, appropriate procedures for quality control.
Okay. I'm with you.
Okay, should I continue?
Yes, please.
Okay. Quality control, appropriate procedures for quality control should be applied to each engagement. The engagement should be planned and performed with a degree of professional skepticism. Before completion of an assurance engagement, the client may ask for the nature of the engagement to be changed to a non-assurance engagement or for the level of assurance to be reduced. If this happens, the practitioner should consider whether the request is appropriate and should not agree to the change unless there is a good reason.
Thank you very much. Thank you. So but the reason I wanted to stop you was I was thinking that what you were reading was a lot, but it's fine. I will still go over it. So now, what is the one we have known that, okay, when it comes to assurance engagements, we are not only talking about audits. They now went on to say that there are two guidelines on the conduct of assurance engagements. The first one is the International Framework on Assurance Engagements, and the second one is International Standards on Assurance Engagements, which is ISA 300. So you can see that the difference between the two of them is just D in the front. Okay. Now, when it comes to the International Framework of Assurance Engagement, what are they trying to say? They basically did a distinction between audit and reviews, right? And they moved on to talk about different kind of engagements that give a reasonable form of assurance. I'm saying all of this with hoping that you were in the introduction classes, chapter 1, chapter 2, where all this type of assurance will have been broken down? Or is there someone that does not know about reasonable assurance and limited assurance in this class? Should we go over the meaning of the two of them? Should we go by the meaning or it's fine? So reasonable assurance is the high level of assurance that usually comes from an audit, while a limited assurance is a low level assurance that comes from review or other form of assurance services. Okay, so that's they basically just broke all those ones down in assurance engagements. Now, we said in assurance engagements, it's not possible to give an absolute level of assurance. Why is it not possible? Even in any form of assurance engagement, it is not possible to give 100% assurance. And why? This can also be an exam question. This is an exam question. They can tell you that audit does not come with absolute assurance. Why does it not come with absolute assurance? The first one is that there's usually lack of precision, often related with subject matter. So sometimes the FS is not complete. Sometimes they can't provide some evidences of things that happened. Number 2 is the nature of evidences that are available, right? And number 3 is usually the time scale. Audit usually follows a very strict timeline, and because of that, they have to do like sampling, and what that gives rise to is basically conclusions based off of samples, and that may not be enough reason to be able to like make a decision about the FS. Okay. Now, International Standards on Assurance, which is now ISA 300, now sets out like the principles, as well, like a document that basically now breaks down how all of this will be done. And there are some key points from the ISA 3000, which is ethical requirements, quality control. You'd have done quality control from your practice. You've done quality control from your practice management, right? Talks about that's ISQC1. That's the procedures that should be followed to make sure that the quality of work that is being provided does not drop. Okay. Also, we have that engagement should be planned and performed with a degree of professional skepticism. And professional skepticism simply means a questioning mind. So you're not an auditor that is just anything they give you, right? You have to be an auditor that also understands that you must be able to vet the correctness of every information before you use it. Also, we have that before the completion of an assurance engagement, somebody may tell you to change the style. They may say, oh, we don't want the assurance to be that serious again. Oh, we just want to give us an in-house report, right? And you have to be careful to make sure that when you now give them an in-house report, they don't now use it for external people. Okay, so that is one of the general key points of ISA 300. Now we'll move on to talk about the objective of an assurance engagement. In every assurance engagement, which audit, review, I want audit related services in this class. So have we? No, I think we have, yes. So audit, review, agreed upon procedure, compilation, right? In any of all those assurance engagements, what is the objective? And trying to highlight
Yes, coming.
Brother Jacob, because you are read now, you didn't unmute. But it's fine. So we start. The objective of an assurance engagement is to enable the practitioner to evaluate his subject. Mr.
I'm actually
Ifeanyi.
muted.
Okay.
Sorry, sir.
And when we ask them to read now, they will not read.
Yeah.
Prudence Jerry. I like your name. So you'll be our next reader, but let me continue. Now, we said the objective of an assurance engagement is to enable the practitioner to evaluate the subject matter against a suitable criterion to express an opinion that provides the user with a level of assurance. This definition now is simply our elements of an assurance engagement, chapter 1, ASHA, where we have a tripartite relationship, a subject matter, suitable criterion, appropriate and appropriate and sufficient audit evidence, and the last one is the audit report. So when they ask what's the objective of an assurance engagement is, there are some things that must be there. You are the practitioner. What are you evaluating? You are evaluating what a subject matter using what suitable criteria. Your suitable criteria are the rules that govern what we do as professionals, such that you can do what? Express an opinion that provides who? The user with what? A level of assurance. Okay? So no matter how you want to twist this definition, it must have all these elements inside. Okay. So let's talk about reporting on an assurance engagement. So like I said, there are different assurance engagements that may not be audits, right? There are different assurance engagements that may not be audits. So what we would have seen before now is our typical audit reports. But when you are reporting on an assurance engagement that is not necessarily audits, what are the things that must be in your FS? So Prudent Jerry is reading for us. So you read for us till you just read to the list of assurance engagement, to the list of types of assurance engagements. Okay. I am with you. Prudent Jerry, you have the room. Hello, Prudent Jerry. I see we have more people in class. Is there a reason why you're not unmuting? Or can you hear us? Okay. Robbie N, can you read for us? You're reading on reporting on assurance engagements, and you're listing the types of assurance engagements.
Okay, reporting on assurance engagement.
Yeah.
The report prepared by accountants at the end of an assurance engagement will include the following elements: a title indicating that the report is an independent assurance report, an addressee, the person or body to which the report is addressed, subject matter of the report, including any relevant information relating to the subject matter reviewed, such as the time period for which the information was gathered, suitable criteria that have been selected for assessments, where appropriate, a statement that the use of the report must be restricted to certain specified users, or that the use of the report should be restricted to a specific purpose for which it was prepared, a statement that the engagement was carried out in accordance with ISAE, a summary of the work performed, the practitioner's conclusion, the date, name, and address of the practitioner. Types of assurance engagement. There are 4 types of assurance engagement for the purpose of examination: risk assessments, business performance measurements, systems reliability, and e-commerce matters. Should I continue?
That's fine. Thank you very much, Mr. Robbie. Okay, so just like he has said, he has read the content of the report. So they're about 9, right? You have the title, the person it is addressed to, the subject matter that we're reporting on, the suitable criterion, whether whether it is restricted to certain users, like, people that have done case study, that front page where you write that this audit report is for the shareholders of XYZ, will not be liable for any other person that uses this information and suffers a loss. Okay, so that is that kind of thing. Then we have a statement that the assignment was carried out in accordance with ISA. So that's a statement that shows that, this was the same criterion that we used to carry out this work. And we have a summary of the work performed, the practitioner's conclusion, and the date, name, and address of that particular report that is being put by the practitioner. So you can see that very similar to an audit, but of course, it's different in itself. Now, this is our broad subtopic for the day. This is one of our broad subtopics for the day, and those are the types of assurance engagement. So we have risk assessment engagement, we have business performance, system reliability, and e-commerce. I'll read this one myself and I'll do well to explain, so you can just follow me. So risk assessment. We said engagement related to often a task carried out by the internal audit, but could be carried out by external parties as an assurance engagement. Okay, so normally from your CSMA, you know that risk assessment is a direct responsibility of managers, right? Managers are the ones that are responsible for risk assessment. Okay, but one thing that we need to know is that when it comes to, let's say, for example, they have a new product line, they want to do an extensive risk identification, and from your assessment, will have told you that risks should supposed to be assessed annually, right? So maybe that first assessment of risks that company does, maybe at intervals, 5 years or something like that, they may use a firm, an external firm, to conduct that risk assessment. And because there is an external firm that is not the direct responsibility of management, some form of assurance can come out of that engagement. Okay, that's the first one. The second one we have is engagement relating to performance management. This indicates to managers whether the objective of an entity are being achieved. Performance is measured and compared with a benchmark, such as a target of budget, by comparing actual results with the results of previous years or results achieved by competitors. Examples of performance measurements include sales, and whether sales targets have been achieved, profits, and whether profit targets have been achieved, cost variances and other budget variances, product quality, customer satisfaction, employee efficiency, capacity utilization, and so on. So basically, when it comes to performance management, like I was telling you, it's like management accounts. Okay, all of us, we know that there's a difference between management accounts and your basically the difference is something the management accountant is being vetted, right? And we can prove that what is there is correct before we can start saying that what we're starting to do now is financial reporting. So when it comes to performance measurement, so sometimes companies can say, okay, we think we're doing good, we think what we're doing is the right thing, but why not we call external people to basically help us evaluate our financial position and our financial status in comparison with industry standards, or basically help us look at how we are doing now in comparison to how we're doing 5 years ago. Let's say, for example, a company is making about 15% profits, right? And if right now they want to say, yes, they are doing well, but if we should compare it to their performance like 5 years ago, maybe our ratios and our analytical procedures will show us that they were doing like 35% profits, okay? So in the current, it may look like they are doing well, but when they engage professionals to help them to carry out like performance measurements, okay, it may now give them like further insight to how well the company is doing. And because they are engaging professionals, it may come with a form of what? Assurance, okay? Now, the third one we have is engagement relating to system reliability. We have the management and stakeholders may engage a particular practitioner to give assurance on the effectiveness and secure operations of their computer system. The accountant's work will focus more on identifying, evaluating, and testing controls within the company's internal control system. The same approach to e-commerce can be used. So when it comes to system reliability, it's basically talking about, like I was saying, it's more like internal control, but in context with their IT system, okay? So they're looking at it that, is the IT system that we have, is it reliable enough that we can is it reliable enough that we can continuously use it for our activities. Okay, so they're saying that the accountants will work with like somebody external that they brought to say, okay, we're reviewing the effectiveness of your system, and we basically want to check whether, as a company, right, your IT system is reliable enough to continue with those procedures that you guys are doing. Okay. Now, the answer that it can be closely related to e-commerce. Now, e-commerce, you see this topic again. You see this topic. This is where I can used to sit down and I used to tell people that anything that relates to like internet, anything that relates to like information technology, I can literally like to ask it, because in their mind, that's them incorporating IT, right, to the work that we do, and that's them being quote and unquote in tune with the current economy. Okay, so that's why you see more and more of these kind of questions. So we want to talk about engagement relating to e-commerce. So we're going to talk about e-commerce in itself, and we'll talk about EDI. Okay, I think that's what we'll do for a bit before we go to engagement relating to value for money. So I want somebody to read engagement relating to e-commerce for us. Quite a stretch, but I think if we should listen, it won't be bad. You guys have done audit planning now. Hello?
No, we have not.
But Mr. Desalu said he needs just one more class with you guys. Oh,
Maybe it's planning. Well, we did approach, not planning.
have you guys done audit reporting?
Yes. Was it reporting we did already? I'll check. But we've not done planning for sure.
Okay. So you
We've not
can
done planning, and we've not done evidence. Now those two for sure.
From the review I have, you have done it too.
We've not done planning, we've not done evidence.
Okay, so you can put that feedback on the group, please, so that he's aware, because he has just one more class with you guys from my
Okay,
conversation.
so I don't know, maybe, sorry, 2 weeks ago or so, when we were having the class, right? When he was talking, he mentioned that we've done audit planning, right? So I think he went off, well, his network issues or something. So I asked the class if we've done audit planning, and everybody said we've not done it. So I think in his mind, he might be thinking that we've done it, but we
So
haven't done it actually.
and I need you guys to really please say it on the group so that he's aware. Okay. Okay, no problem. It's fine. It's fine. So somebody can just read e-commerce. I think it's like a page, but it's not something that is impossible. So another person will just prepare to read value for money before I explain. So somebody reading for us. What you read, you cannot forget. If I just continue talking, just say, that it was good hearing her voice, but you may not be able to remember. So it is good to engage your own reading too. So who's reading for us?
All right, engagement relating
to
okay.
Engagement relating to e-commerce matters. Entities may use information technology to conduct business transactions using e-commerce or electronic data interchange, EDI. EDI is the process of transferring documents between the computer systems of different entities. An extension of EDI, known as SET, Secure Electronic Transmissions, is used to process money transfers electronically for credit cards and debit cards. Most e-commerce activities is carried out over the internet, with customers buying goods or services through the website or sellers. An important aspect of e-commerce is that users of an e-commerce system need to trust in the integrity of the system. In addition, internal controls for an e-commerce system may be efficient, but they may not be an adequate audit trail for checking transactions and confirming that the controls are efficient. Risk and management with e-commerce.
Okay.
Risk arises from the use of e-commerce, such as a loss of transaction integrity, increased security risk with remote trading than with a face-to-face trading or paper-based trading transactions. The use of inappropriate accounting policies, for example, in respect of the capitalization of website development costs. And the last
Okay.
one is legal and regulatory risk. This is the risk, for example, that e-commerce activities may be breaking the law in some countries.
Okay.
The
So yeah,
e-commerce,
audits. All these things are just subheadings or exam question subheadings. While I'm listening to e-commerce audits.
e-commerce audit. A firm of accountants may be engaged by a client to provide assurance about the integrity of transactions on the client's website and that the client's e-commerce system is suitably protected from risk. The audit approach to an e-commerce system should include the following elements. Number one, practitioner should decide whether the engagement should be accepted. Two, plan the engagements. An important aspect of planning may be to make available audit staff with appropriate expertise in e-commerce systems. Obtain a detailed knowledge of client's business. It should consider liaising with the internal auditors of the clients if there have been an internal audit investigation to the client's e-commerce transactions or systems. The firm should identify and evaluate the risk in the system. It should ascertain and evaluate the control environment and the specific internal controls that are in operation.
Okay. The last one.
It may also be appropriate to perform a going concern review, particularly in the case of entities that rely mainly on e-commerce activities for their income. Number 5, engagements relating to value for money.
Okay,
Value for money means
that's okay. Thank you. Thank you. So now you can go and check what was that date? Was it not November, either March, July 2020 question 1 or November 2019 question 1? Their number 1 question was e-commerce. I think that was when I can change to the question to about 40 marks. And about 20 marks in that 40 marks was e-commerce, and it was coming from this chapter definitely. So it's not, I always say it's not so hard. It is something that you know normally, right? So just like what I was talking about assurance services not being only audit, like I was saying, in recent times, there are so many companies that do not even have a physical structure. They don't have a physical presence, but these people are churning out numbers, right, every now and then. So they're just like entities they may use they may use IT to conduct their business, either using e-commerce or EDIs. E-commerce is the buying and selling of something online. I don't think I need to define that. Okay, trading basically online. What is EDI? That's how we got to audit planning. So EDI, the best way I explain EDIs is when you go into a supermarket and then they take that item, they scan the barcode, and immediately you already know the price that you are paying for that item. Okay, that is one of the easiest ways to explain EDI. It's just the transformation of like a computer language such that it comes out as a readable format to you. So they just have small paper. The moment the guy just press print, and that becomes a evidence that you can even tender to your place of work for them to refund you. Okay, so that machine in itself is an electronic data interchange that converts just a scanning of code to a readable information that you can use. Okay, or one of the ways we first saw it was ATMs. When you go to an ATM and you withdraw and they say receipt or no receipt. I remember how there was this stereotype when I was growing up that if you go and request for receipt, your ATM will hang. But yes, that's one of the first places we saw it, okay? When they give you a leaf when you make a withdrawal, okay? So it converts the machine language that was in the ATM into a readable format that you can digest as the external user, okay? So those are like the 2 broad forms of e-commerce, engagement related to e-commerce. Now, they went on to talk about e-commerce in detail, and they were saying that e-commerce is basically the transactions are carried out over the internet. And one thing that is very synchronous with e-commerce is web trust. Everybody's selling bag, right? Everybody's selling bag, but we may know about Fine Funky, we may know about like popular bag vendors. And one of the reasons why people will consistently buy from them is because of the kind of trust they have in the quality of work that they do or in their services. So when it comes to e-commerce, web trust is a big deal. People feel like, we're talking about it, that why do Nigerians not like to order from websites? And that's because there's just this perception that the moment I put my card details somewhere, anything can happen, okay? And then people don't want to do that. So that is like, we can see that we are still having issues with our web trust when when it comes to e-commerce in Nigeria. Now, moving on to talk about one of the major things they face is that internal controls in e-commerce may be efficient, but it may not be adequate for audit trail. So I was saying that sometimes you go to those printing things, the guys already say print, and maybe the lights went off or something, and it's like, has already imprinted the code. I remember when I was in one particular, I was in the place or something, and the guy had to now call his superior and say, but he was already doing it, but he cleared and he already submitted and all of that, but I couldn't get like an actual receipt. So you can see that yes, e-commerce can be good, but because sometimes there may be lack of audit trail, you may not be able to follow transactions from the beginning to the end. That also poses some level of threat. So what are the risks that are involved when it comes to e-commerce? There can be loss of transaction, loss of integrity in transaction, right? The moment something becomes remote, right? There's security risks. You can be on your system because in Nigeria we don't used to watch too much film. If you people that see movies, you can just be on your system. They just send you a text, but the moment you open it, those people have access to your system like that. Okay. Then we have number 3, there can be use of inappropriate accounting policies. We know this. If you know all this, one of the problems that we have with like startups in Nigeria, they just do whatever they choose. Is they don't understand the nitty-gritty of like accounting standards, accounting policy, even something as little as business entity concept, where they say that, oh, this business is separate from its owner. This business cannot keep funding the owner's life. They don't understand it. So when it comes to accounting policies, because it's e-commerce, it's usually harder to apply. Then we have legal and regulatory risks. Every now and then, these e-commerce businesses, they just be on their own, but they are not following a law that is literally standing, and that can pose a threat to their continuance as a business. So those are the risks. Exam question, trust me, life and direct exam question. Now, when it now comes to e-commerce audit, that's one that concerns us, okay? We're saying that accountants may be engaged to provide assurance about the transactions of a client's website, right? And when you have been called to do that, what are you supposed to do? So they've outlined the procedures, the audit approach that you're supposed to do. And I've always told you that one point that you can always hold on to is that you have to understand the client's business, okay? That point is always there. But let's look at what they've written. They said, number 1, you have to decide if you want to accept the engagement. And this one is important because it requires additional skill, right? So you know that you are only accepting engagements because you have the appropriate knowledge to be able to execute it, right? So when you accept the engagement, you plan the engagement, then see what I said, obtain a detailed knowledge about the client's business. Then number 4, consider liaising with the internal auditor. In this kind of engagement, there's no how that you're not liaising with the internal auditor, because the guy is the one that was there 365 days as well with them. He's one that knows how they run their system and all of that. So it's very important for you to also liaise with the internal auditors. Then we have the firm should identify and evaluate the risks in the system, and it should ascertain and evaluate the internal control, because yes, when it comes to e-commerce, I know even for like all these normal small Instagram businesses, the person that's like validates the order and confirms payments usually separate from the person that packs the order. So those are like small controls that they are putting in place. But if we're thinking high-ended like Shein, like ASOS, all kind of things, of course they will have like control procedures in place, and that's one of the things that you are coming to check, that okay, how intact is like their internal control procedures when it comes to this particular subject. And then the last one is that it may also be appropriate to perform a going concern review on the entity, right? So because a company can have all these plans, but if they don't even identify that they are close to liquidation or bankruptcy, right, that can just stop or disrupt any other e-commerce growth plan that they have. Okay, so the 5th assurance engagement that we have is engagements relating to value for money. So I already said somebody was going to read for us. So who's reading for us? Who's reading for us? So assurance relating to value for money. Or should I read it? Okay, no problem. You know one thing I like about life? Everything is in turns, turn by turn. You see how I'm talking now? You see how I'm just stressing my voice, all of that. A time will come, you will sit in your exam hall and I will be sipping juice. I will lay down and rest my head and sip juice. So I love it for me. No problem. Might as well just read. So engagement related to value for money. Value for money.
I could read. I just wanted it. It can be one person reading. It's like somebody. There are so many people on the platform.
We are too many.
I can read it if you are okay with it.
No. You have already read for us. Thank you, Mr. Robin. If I'm your car for, I've not heard your voice in this class. I called Prudent Jerry the last time. He didn't answer me. Jacob has read, Zainab has read, Modella was on this call and then she dropped off. Okay, Mr. Elvis, what's happening today? Okay, then I can see Bemi Fasui. There's some names
Bemi
that
has read. Bemi has read.
okay. So where is Prudent Jerry? You see people that just connected to call and then they drop it and say, oh, these people, their wala is too much. Okay. Zainab, please help us again. Just help us. Let's just start from the top. Or is that
Okay.
Value for money.
Oh,
okay? Zainab, let's Elvis read.
okay.
Thank you. Yeah, value for money.
So where am I starting from? Where's the value for money again?
That means that you're not following us. Say you people are saying.
I've seen it.
You're starting from engagements relating to value for money.
All right, engagement relating to value for money. You've scored it out again. Let me check. Okay. Value for money means using resources in the best way in order to achieve intended objective. There are 3 aspects to achieving value for money, often known as the 3 E's. Economy. This means spending money carefully and not paying more than necessary for resources, materials, labor, and other expenses, doing it cheaply. Efficiency. Efficiency means using resources in such a way that they produce the greatest possible amount of output. It means getting more from the use of available resources, doing it well. Effectiveness. Effectiveness means using resources in such a way as to achieve the desired objective, doing the right thing. The nature of prospective financial information.
Just hold on. No, you still read that nature of prospective financial information. So, but just hold on. Let me just explain this value for money, right? So, value for money. Thank you. Value for money audit is called the 3 E's, right? I like this thing. I remember knowing it from like 8 years. So there are 3 E's when it comes to an organization, and sometimes they can, like I said, they can engage people externally to help them carry a value for money audit, and those external practitioners will give them a report in terms of their value for money. Now, when it comes to value for money, what are they looking at? 3 things: economy, efficiency, and effectiveness. Economy is that how are we deploying the resources that we put out, right? Are we managing money carefully in terms of our material, labor, and other expenses? So economy is, oh, your expenses are down by this, all of that, and you are still able to do the same level of work that you previously did, right? That's economy, doing things cheaply. Not cheap, yeah. The second one is not efficiency, and it means doing things well, and it basically means from an input-output basis. So I would typically use an example of, there's some people that know how to cook spaghetti. The spaghetti will just swell up, and one spaghetti, 5 people can eat it. So that's efficiency, right? Or they want to believe that you have just 3 staff, or it's just a 3-man team, but you people are doing so much in the company now. To them, that is efficiency, because you people are doing things well in an input-output basis. Now, effectiveness, which I actually really pay attention to, is doing things the right way. So we're looking at the process. That will say that if you be called your excellency, the process as which was used to put you there must be excellent. So that is what I'm basically trying to say in effectiveness. We're saying that it is the process of doing things the right way. We're looking at the process that was done. Yes, something may be efficient. Something may be efficient, right? But it may not be effective in terms of the procedures. So you have a 3-man team. Yes, they are able to do work, but maybe so many internal control procedures are supposed to be in place and not in place because those people are overworked, they are overstressed. Okay, so that's economy, efficiency, and effectiveness. Now, let's talk about the nature of prospective financial information. Okay, if you have done, I don't know the exact topic now, but in audits, really, yeah, in audits, really, if you have done maybe audit planning, audit approach, things like that, you would have talked about high risky areas or risk-based approach, right, to an audit. And one of the high risky areas in an audit is estimates, right? Estimates, provisions, things like that. And why? It's because companies are usually the ones that have the sole responsibility of putting numbers to these items, right? Things like provisions, things like warranty. If you want to question it, tell you that are the ones that know why the reason why we're putting this figure, Abi, blah, 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 blah. So that's basically what we mean when we say the nature of prospective financial information. Normally, audit is auditing historical information, but there are instances where, as an auditor, you are called in to do audit of prospective financial information, if financial information that is yet to occur. Okay, so that's what we're reading about. That how do you audit things that are yet to occur? How do you audit things that you have put as provisions? How do you record, or how do you audit things that you have put as estimates? Okay, so that's what we'll be looking at. Also, another place where they ask questions. Okay, so you can continue reading for us, Mr. Elvis.
All right, Ma. It says the nature of prospective financial information.
Am I not sharing?
Ma?
Am I not sharing my am I not sharing my screen?
It's showing, You just
okay.
I'm okay with it.
Okay.
All right, Ma. So traditionally, the role of the auditor has focused on providing assurance on historical events. For example, on financial statement relating to a period of time in the past. As business and economic environment have changed, demand has grown for professional accountants to provide assurance on information relating to the future. Such information is known as prospective financial information. PFI is widely used both within an entity, internally and externally. Internally, forecasts and projections are widely used as a form of management information. Examples include forecasts and projections relating to revenue, capital expenditure, profit, cash flow, working capital. External uses include profit forecast of cash flows to support an application for a loan from a bank. Profit forecast to support or defend takeover bids. These are several specific points that might apply to PFI engagement. There are several specific points that might apply to PFI engagement. Number one, understanding the nature of the information to be examined. Number two, establishing the intended use of the information and the intended recipient of the final report. Number three, establishing whether the information will be for general distribution or limited distribution to a small number of users. Number four, the nature of the assumption that have been made by management, whether they are best estimate assumption for a forecast or hypothetical assumption for the purpose of making a projection. Number five, the time period covered by this information. Procedures will include the following.
Wow, this is longer. Okay, I'm with you.
Where the audit firm has no previous knowledge of the entity, it should obtain sufficient knowledge of the entity and its environment. If best estimate assumptions have been used in preparing the PFI, in bracket the forecast, the auditor should seek evidence to support these estimates. 3, if hypothetical assumptions have been used to prepare a projection, the auditor should assess whether they are realistic and sensible, and whether the full implication of the hypothetical assumption have been properly reflected in the PFI. The auditor should assess whether the PFI contains all the relevant material items and that nothing of significance has been omitted. If part of the future period in the forecast or projection has already passed, the auditor should review the actual results for that part of the period and compare actual results with the forecast or projection. The differences will help the auditor to assess the reliability of the forecast or accuracy of the projection. The auditor should also check the arithmetical accuracy and consistency of the projected financial information that has been prepared. The auditor should obtain representations from management on management acceptance of responsibilities for the information, the intended use of the information, the completeness of the assumptions that were made to prepare the PFI. And we have forensic auditing.
Okay, thank you very much. That was a long read. Thank you. Okay. Yes. So just like we were saying, so Well, they're looking at how do we audit prospective financial information, and then they went on to say, what are the examples of prospective financial information, right? What can be a forecast? And anything on your FS really can be a forecast. Actually, income statement items, right? We have revenue, capital expenditure, revenue expenditure, profits, cash flows, working capital, right? They are usually estimate. They can be estimates of these things, especially when management is like making plans. So what are the external uses of all these forecasts, right? We may want to project revenue because we want to know what our projected profit will be. Abi, we want to project our cash flows because we want to be able to forecast our cash flows. Maybe we want to apply for a loan. We have a borrowing. You understand? Even when it comes to investors, right? Securing investors, we may want to do all these projections, right? Also, it can be used for a takeover. That you're basically trying to do your projection and say, okay, if you join us, if you do this, this is what's happening, this is what our figures are looking like, all of that. You're basically trying to buy somebody over. So that is why companies in themselves have to do like all these projections. Okay. Now, there are several points that may apply to a PFI, right? What are the points? I've told you. When they ask you that, what are the procedures for anything? What are you doing? Obtaining and understanding. Abi, understand the nature of the information to be examined. Number 2, ask yourself that who are the users of this information. Number 3, establish whether the information that you are vetting will it be used for general distribution or is it for a small number of people. Then you have to examine the nature of the assumptions that have been made by management. Look at the reasonableness. So this is why I highlighted it. Said where their best estimates for a forecast or hypothetical assumptions. So there are 2. They call some projections are being called best estimates, while some things are being called hypothetical assumption. Best estimate is when there's a pattern. Profit was 50 million last year, so we are projecting 60 million. Abi, we are projecting a 12% increase. You understand? Yes, now 1.2 times 50, 60. Abi, right? So, yes, am I correct? No. Profits was 50 million last year. We're projecting 55 million. Abi, 5% increase. What am I saying? 10% increase. That is 55. So that's for best estimate. There's a flow, right? Hypothetical assumption is for things that there is no financial backing of the figure that has been given, right? So that's they call it hypothetical assumption. Like now, maybe iPhone 16 now, they now put on their FS warranties. Maybe they look at it that the phone we release, the screen is doing this one. We're estimating that people will have this amount of refund, right? And they just put that figure on their FS. That figure that they put in is called an hypothetical assumption. Okay? Now, another thing is the time period that is covered for this information. You as the person that is providing assurance service on the prospective financial information, you have to look at it that for what time period is this information that I'm giving? For what time period is this report that I'm giving to this company, so that you can know the impacts that it will have. Now, you see these procedures, exam question, they will ask you if they want to. There's no other. They don't want to ask you e-commerce. Be very sure. They will ask you that what are the procedures to be done. Okay. And I told you again, where the firm has no knowledge, what should you do? Obtain an understanding of the firm. Okay. Now, I added this one because they've now said that if it is best estimate, the auditor should look for all the evidence to support it. So I'm saying that if your last year was 50 million and you're saying 55 million, I want to see last year how it was 50 million. I must gather all the evidence to confirm that, yeah, so revenue last year was really 50 million. Okay. Now, the third one now says that if it's a hypothetical assumption, you must check the realisticness and the sensibility of the figure. You can't tell me that you sold iPhones worth 100 million and you are putting 40 million as warranty and say that you're estimating that 40 million out of the 100 million you sold will be repairs and renewals and all of that. So I don't know that was sensibility behind this warranty figure that you have put down. Doesn't mean that the phone is not good at all. Okay, so when it's best estimates, you collect evidence. When it's a hypothetical assumption, what do you collect? What do you look at? You look at the reasonableness and the sensibility behind the figures. Okay. Next up, the auditor will now assess whether PFI information have not been omitted. Everything that needs to be there has been considered. Also, you want to check if part of the future period has passed. So sometimes they can call you to do a PFI that is supposed, no audit is done in arrears. And they say, okay, in the first 6 months, we're expecting 40 million returns. And you're already in March. And you're looking at it, okay, for those 40 million return that you were saying in the first 6 months, January to June, you're expecting a 40 million naira return. We've only seen 4 million return out of this 40 million naira. So if we do an estimate based on the remaining 3 months, we can estimate 8 million naira as against the 40 million naira that you have looked at. So if a part of the period has passed, you also have to look at it and say, what's the reasonableness of this figure that they've put down? Okay, then we have the auditor should check for arithmetical accuracy. It should obtain written representation from management. What's the management representation? It's a letter by that is being sent. They'll say from management to auditor. But the funny thing is that it's auditor that he writes what he wants to be there and gives it to management and then to sign. But it is just saying that accepting their responsibility, that we're the ones that put this projection figure, it's we that puts it to. Don't worry, we know what we are doing. You understand? That is basically a management representation. Then we have management acceptance of the responsibility of the information. You see, also the intended use of the information. Oh, we're using it for a takeover. We're using it for a merger. We are using it for our next year. But we are using it for our interim AGM, right? So then we have the completeness of information just to make sure that everything that is there is what should have been in their prospective financial information. Okay, so the last part of this chapter is forensic auditing. So let me go to the group and see who will reach for us. Prudent Jerry, do you have our time now? Or Alero, can you reach for us? Alaro. Okay.
Ma, I'm pretty outside and it's a bit noisy, ma.
Okay. Thank you. Thank you.
So I have a question. I know we are pressed for time because of what is left there. This forecast that an auditor is expected to provide assurance services.
Yes.
They do it, right? That means if they are doing it, there will be a lot of heavy disclaimer.
Yes, definitely.
There will be heavy disclaimers for this service.
Yes, definitely. You can see that that's why they're telling you that when it's an estimate, you collect the evidence supporting that estimate, right? When it is a hypothetical assumption, you check the reasonableness. That you guys, how are you writing provision 200 million? You understand? Like on what basis, right? And what you can do is that's why things like industry standard comes in. Look at competitors' FS, right? And say in comparison to what your competitors are doing, what is reasonable of the figure that you are doing. And that's why most of the time, this kind of hypothetical PFI is usually in-house. You guess it's not an information that goes.
Okay, because I was going to ask, why will an auditor take up this engagement?
So
because the risk ahead.
Every now and then there are measures now. Every now and then, so it's usually. Okay.
Yeah, that's fine. Yeah.
Can you reach for? So are you talking already? If you're talking, we cannot hear you because I know that you are unmuted now. Can you hear us?
Yes, I can hear you.
Oh no, I don't mean Mr. Rabi. I'm asking Mr. But you can hear us, Abi. We can hear you. Hope you are in a place where you can talk. Can you speak where you are?
I can hear you.
Okay.
Yes.
Okay. So forensic auditing for us. Just as an overview, I remember how this used to, even though some people in this class, this may be their dream. You know, when you were looking at audits, you're like, I want to do forensic for investigation for all these crimes. So that's what we're going to look at, forensic auditing. It will be quite interesting to know that forensic auditing is just forensic accounting. And yeah, it's a long read, but it's not too long. So it's something that we can. So you read everything for us. Then I'll come back and explain. Okay, so let everybody be ready. Open your mind, open your hearts. Let's do this.
Can I read?
Yes, please.
Okay. In general terms, forensic means used in connection with count of law in accounting. The term forensic therefore relates to the use of accounting information for legal purposes. In the resolution of legal disputes or in disputes that are resolved by a court of law, it may be used in both criminal case, i.e., for example, fraud, fraud cases, and civil cases. Forensic accounting. Forensic accounting involves preparing financial information for use as evidence by a court of law. Examples include the provisions of financial information relating to 1. Loss of earnings, 2. Settlement of a legal dispute involving the valuation of a business, 3. Losses relating to an insurance claim, 4. A divorce settlement. I read on. There are two aspects to forensic accounting. 1. Forensic investigations. 2. Forensic audits. Read on. A forensic investigation is a forensic audit carried out in response to a suspicion of wrongdoing, usually to prove or disprove certain assumptions. Examples: Mr. X perpetrated a fraud, or Mr. B was negligent with his job. Providing evidence in a money laundering case. The objective of a forensic investigation is to obtain evidence that might be used in legal proceedings to resolve a dispute or prove innocence or guilt in a criminal case. Forensic audit is an element in forensic investigations. It refers to the methods and procedures used to obtain audit evidence in forensic investigation. Forensic audit may be defined as a process of 1. Gathering, analyzing, and reporting on data or suspected irregularities. In some cases, giving preventative advice in this area. The nature of forensic investigations. Okay, it's a subtopic. The nature of forensic investigations and audit. Forensic investigation and audit are associated with situations where disputes arises or wrongdoing has occurred such that criminal or civil action is being taken in the court of law. The following general areas may give rise to forensic auditing. 1. Forensic investigation and fraud investigation. 2. Negligence investigation. 3. Insurance claims and the assessment of losses. I read on. In any of the above examples, a forensic accountant might be called on by the court to act in the capacity of an expert witness, providing evidence to that court on the financial implication of a situation or on whether there is evidence to substantiate claims of fraud or negligence. The ethical principles set out earlier apply to accountants carrying out forensic work as they do to accountants in every situation. Ethical principles and integrity, objectivity, confidentiality, professional behavior, and professional competence and due care. Subtopic: procedures in forensic investigation. The procedures that a forensic accountant will carry out will depend on the terms and the objective of the engagement. In many cases, procedures will be similar to auditing procedures and will depend on exactly what is being proved or disproved. It may be used to think about the elements in a normal audit investigation. 1. Establish the objective of the investigation. 2. Plan the investigation with a view to achieving the objective. For example, in an investigation into suspected fraud, the auditor should plan how to establish whether fraud has occurred, how it could have happened, and how long has it been going on, as well as who has committed the fraud and how much has been lost. 3. Note that the audit evidence may be gathered in various ways, similar to the method used in a normal audit. This includes interviewing individuals, including individuals suspected of fraud. 4. The auditor should use the evidence obtained to reach an opinion. If the evidence is sufficient, you should try to obtain additional evidence. 5. At the end of the investigation, a report is being prepared for the claims.
Thank you very much. That was such a long read. Thank you very much. But yeah, well broken down. So I'll just now further break it down by just explaining. When they say forensic, like the term in itself, what does it really mean? It's just in connection with courts, right? Is in connection with courts. Okay, and what we're trying to say is that when we put forensic in accounting, it just means we're saying accounting for legal purpose. Okay, now when there is a resolution, when there's a dispute in courts, which can either be a criminal case or a civil case, you talk about criminal and civil case in Auditors Liability Chapter 4. Okay, where you have civil cases are the discrepancies that we have between two individuals. Criminal cases are the discrepancies that you have against the state or government. So everything that literally infringes a person's human rights is a criminal case. You get, but the forensic in front of accounting is basically what puts the legal in front of it. You get. Now, moving on to talk about forensic accounting. We said forensic accounting is the preparation of financial information such that it is an evidence that can be used in the court of law. Okay. Now, what are the information that you can provide? Loss of earning. Like the reason why you may need to carry out forensic accounting, maybe there's loss of earning, maybe there's a legal dispute involving the valuation of businesses, there are losses relating to insurance claim. This one is very, very prominent. Then even in divorce settlement, you must have heard about those prenup agreements, that kind of thing that they do abroad, right? So in this case, they may need the service of a forensic accountant, right? Now, quite interesting. They now said forensic accounting now has two areas, which is what? Forensic investigation and forensic audits. Okay, forensic investigation and forensic audit. Now, the first thing they now wrote in forensic audit is that the person who wrote a forensic investigation is that a forensic investigation is a forensic audit. Okay, just that it is done where there's already a suspicion of wrongdoing. The reason why it is specifically called an investigation is that there is already a suspicion of wrong. And that's how basically like how FBI's, all those kind of guys abroad, they move. They would have already, before they will start training you, they will have already been in a suspicion. And it's not like Nigeria that they will come and arrest you with just one case count, you understand? Abroad, before they will come and arrest you, and your cup will have full, to have overflowed to a certain point, you understand? So that is a forensic investigation. There's already a suspicion of wrongdoing, and that is why forensic investigation is even brought up, right? So usually to provide evidence, that to support the wrongdoing or to negate against it, you understand? While forensic audit now has an element of forensic investigation in the terms that it is a method and procedure that's being used to obtain forensic to obtain audit evidence in a forensic investigation. So when you are doing it, like now, somebody calls you to come and I facilitate that this person, and you say, okay, no problem. That is an investigation. Now, in that investigation, the procedures that you now use to generate audit evidence is now an audit. You understand? Is now a forensic audit. You get. So forensic audit is now the process of gathering, analyzing, reporting on data for suspected irregularities or gathering information for preventive measures, right? So that means that sometimes you may gather information and it may not show you anything, but it may serve as information that is being gathered for preventive costs. You get. Now, we now moved on to say, what is the nature of investigations and audits? Basically, is like I said, is either for a criminal case or for a civil action. You get. You must have either offended the government or you offended somebody. And this is what will now give rise to fraud investigation, negligence investigation, or assurance claim. Now, another example question that they can ask you is that what are the ethical principles that governs or guides a forensic accountant? And they've said it here that it is the same ethical principles that govern accountants that also governs your what? Forensic accountant. So our copy is still here. You understand? Integrity, objectivity, confidentiality, professional behavior, professional competence, and due care is still here. Do I have a class?
Yes.
Yes, ma'am.
Okay. And now the last part of this chapter is basically looking at our procedures for forensic investigation. And like I said, somebody is like, how many procedures do I want to know? How many procedures do I want to know? I'm not going to lie, it's not really easy. It's not because the subject is broad, we're looking at so many things. Like I mean in the whole audit. But how you can do it is to familiarize yourself with it. Read it as much as possible. And like I always say, the only time it is wrong to look at past question is inside the exam hall. Up until you get to that exam question, there's an NPT course chart for questions and the chapters, like every diet and the chapters they ask questions on. So you can pick the chapter on assurance services and look at all the questions they ask there. Read the question, read the answer. Even if you have not already read your book, read the question, read the answer. What it does that it prepares your mind for the kind of questions to expect. Even in the example. Okay, so now what are the procedures that the accountant is supposed to carry out? Number one, they're supposed to establish the objective of the investigation. Okay, number two, plan the investigation. Number three, gather audit evidences as it relates to that investigation. That is where forensic audit comes in. Now, then the auditor will now use this evidence to reach an opinion. Either he's saying that, okay, the suspicion you had was correct, or the suspicion you had was not enough. So they now say that if your evidence is insufficient, you will now also try to get more audit evidence to support your point. And at the end of the investigation, you give a report to the client. Okay? So what I want us to now do is to go through our past questions. So I'll just highlight I will highlight the Pathfinder again on the group, and I'll open. Okay, let me just highlight it here. Just give me a minute. Okay. Sent it last week, so it's just here. Okay, so which diet are we looking at? Okay. So I'm sharing my screen with the question. So you just tell me the diet and I'll open the question. Is that okay? So I have the question. So which diet? So I will need somebody to respond to me. Oh, I beg. So I should be doing it too by myself. It is well. So assurance services. We have May 2022 question 3. Okay. So I'll come here, search for May 2022. Okay, question 3. They said, describe the general approach to the assurance of work that an auditor should consider before accepting an engagement on PFI. So what you're writing is the normal procedures. They now said, detail the procedures applicable to the cash forecast of September. They gave you a case study, right? So they said you should detail the procedures that you will use when evaluating that particular forecast. And they said, prepare a summarized presentation on what the reporting accountant should consider before forming an opinion on the prospective PFI. So in your various subheadings, right, those answers will be there. It is for you to open this one, open the answer, and basically read what they've written there. And if you check the material, the answer is there already. These procedures, I know that they're there live and direct, okay? A summarized presentation will basically be the content of your assurance services. You do a title and addressee, the use of the information, you understand? Okay, so let me look at it again. We have May 2021. So assuming you choose to accept the PFI, recommend the examination procedures that you will use in respect of the review of PFI. You see, that's one that they talk about. If it's a hypothetical assumption, collect evidence. If it is estimate, check the reasonableness. Consider the use of the information. If a part of the PFI has already started, check the reasonableness. 9 marks. Can you see? Okay. Then question 5. Can you see? Distinguish among forensic accounting, forensic investigation, and forensic audit. 6 marks. Identify various government organizations associated with forensic. Somebody in this class should tell me. List government organizations that were associated with forensic. Let me see if I have smart people. This one is not in your pack, but yeah, government associations that will be attributable to forensic. Police,
FIRS.
police,
FIRS.
FIRS, yes.
ICPC.
ICPC.
If it is public practice, okay. ICPC, FBM, we said Nigeria. So you can basically even NDLEA, right?
Yeah.
Just list your operations. Even CBN, you get. Then they said apply the fundamental principles for a forensic auditor. You know, I told you now, it's the same fundamental principle, okay? That's the same copy. Then they said describe the procedures that will be adopted by an auditor in a forensic accounting. That's the last subheading. In the material. So let's look at one more. That's it. 2020. So this is when you finish reading this, when you finish, after this class, when you finish reading, that's how you read. You go to the chapter, you see what are the questions that are there. Do I even know if it's only this chapter that comes out in my exam? Can I even pass? If you now go through only that chapter and you cannot still answer it, you now know that maybe all the things that Christiana said today, they were not for me. Okay? You need to be very honest with yourself. We are too grown to be lying to ourselves. That's one of the things that students do. They lie to themselves before they get to the exam. You now say, why didn't you pass? And I did it though. What did you do? What is it? He said you should develop a work plan for necessary tasks to be conducted in accordance with ISA 400. That is the prospective financial information. This one is more like audit planning. The work plan for a normal distance will be the same work plan. But you can go to the answer. If you look at it, it's very similar to the procedures. Evaluate the conditions to be made and the procedures to be followed before accepting an engagement. Yes, this is assurance services, but the answer is also in an audit plan. The normal plans that you consider, right, before accepting an engagement, the same plans that you consider before accepting a PFI. And they said outline a report to be presented. That is your normal template for what an assurance. If somebody is looking at me that when do we do all these things? Should I go back and show you? But they are all in the material that we just use now. I want to actually show you The time it came out as number 1, May 2019, question 1. So let's just go there. Okay, so in this diet, discuss the concept of forensic account. Question 1. This was just one, Sha. Discuss the concept of forensic accounting and explain the nature of forensic investigation and audit. 10 marks. This one, nobody could escape it. But it's a sweet question now, is it not? Is it hard? Forensic accounting is basically doing accounting in such a way that is an admissible evidence in court, okay? Forensic investigation and forensic audit, they are under forensic accounting. Investigation is when there is a suspicion of wrongdoing, Abi, and it is under forensic audit. Audit is an element of forensic investigation where you gather all these procedures or you gather all the evidence, Abi, for an investigation. That's the meaning, and then you can build on your points in the exam mode. Then they say analyze 5 fundamental principles, 10 marks. Explain the procedures to be followed in a forensic investigation engagement, 10 marks, 30 marks. Assurance services. Is it bad? Don't lie. Is it a bad diet? No. But students will come back and tell you that, I don't understand that side. I don't remember that side. So we have like 1 more minute. Just wanted to ask any questions? Any question, any contribution, any matters arising? Nothing, Abi? Hello, nothing at all, right? Okay, I'll be talking. You will not answer. A time will come where I'll be quiet, and this is the time.
No,
Thank you very
your
much.
comments are acknowledged. Just I think what is left is to go and do the work now, because once the reading is adequate enough, then the questions becomes easier. But if you don't read, that is when, like you were referring to this forensic audit investigation, if one has not read, even simple things become difficult. And that is the truth. But if you read, it becomes easier.
Okay. Okay, I agree. No problem. God will give you wisdom.
Okay, but if actually you are asked to differentiate between a forensic audit and a forensic investigation, what will actually be the main points or facts we have to list out?
I just said this now. Forensic accounting is accounting such as an admissible evidence in court. Investigation and audits, they are under forensic accounting. Investigation, you are doing forensic accounting because there's a suspicion, right? And it is under forensic audits. Forensic audit is now an element of forensic investigation. So that's it. Okay, thank you very much. I have another class to jump on right now. Thank you.
Thank you. Thank you.
Thank you.
Yes, come in.
Good morning, sir.
Yeah, morning. Okay, that's fine. I'm hearing you.
I'm sorry, please. I don't know if you can help me as you do the other thing, 3,000 there. My wife just told me now that my small boy. I don't know. There is one thing.
I don't meet manager. I don't have now. Meet manager first. I don't have anything.
If anything, I will keep directly.
I don't. Just they might have given you some, but if I have, I will give you.